Good morning and welcome to today's webinar, which goes by the name Real-Time Daily Trading Ideas. Today is February the 26th, and I'm moderating our international webinar from our office in Berlin. My name is Alex Raftopoulos, and I'm happy to be talking to you. Today we will be speaking about trading ideas, strategies, market screenings, and we'll be answering your questions. Before we can start with the actual webinar, we will briefly present the risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to its complex nature. Please make yourself familiar with these instruments by using a demo account if you are a starter. Please feel free to contact us if you need any assistance with that. Please also note that none of this is investment advice. The statements made in this webinar only represent the personal opinion of our traders. You can also find the whole risk disclaimer on our website. Here you can see the schedule for the week. Today it's Paul's turn. And before I finish off with the introduction, I would like to invite everyone interested in trading to try us out and benefit from the best index and forex offerings with spreads of just 0.8 pips. Please feel free to have a look around our website and explore our international activities, and do not hesitate to contact us should you have any questions. Enough of me for the moment. Now it's Paul's turn. Good morning, Paul. How are you doing? What's your outlook of the markets for the moment?
Good morning, Alex. Good morning, everybody. I hope that you can hear me. I hope that you can see my screen. Good morning, everybody. Here we are, Tuesday, 26th of February. It's a glorious day here in the UK. It's an uncommonly lovely day. I hope wherever you are, the weather's glorious as well, and I hope that the markets are offering you opportunity. I just want to start by a quick look at some of the big FX sort of themes, shall we say, that link into the bigger picture that we've talked about over the last couple of weeks. Those of you who have joined me over the last 18 months or so, that we've talked about, how in terms of FX markets, I'm always particularly looking to sort of try and buy strength and sell weakness. That's what is of interest to myself, and so what I look at here is every week, every weekend, I do a little bit of work on just establishing, where the strength and the weakness is within those FX markets, and actually that gives me a picture of where I need to focus my efforts going forward. And I just wanted to draw your attention to effectively to begin with, just to the Japanese yen and also the Swiss franc. But when we started at the start of this year, we had the Japanese yen as the number one, as the top dog, with Swiss franc as number two in terms of the two strongest currencies. And that tells us an awful lot, because invariably, that was a real indication that we were in a risk-off environment. Markets were nervous and worried about what might happen. In particular, the sort of theme that we talked about with regards to the sort of Trump Z US China trade talks. People were worried about that. People were worried about what might go wrong there, and have that the impact that would have on global markets. So invariably, with Japan, as the Japanese yen is the number one strongest currency and the Swiss franc as the second, well, invariably that was given as an indication that markets had a real risk-off mentality. But if we now jump across to where we are this week, where we're starting this week, and actually what we find is now that the Japanese yen is 6th out of 8, and the Swiss franc is 7th out of 8. And the only thing that's propping up the Swiss franc from the bottom is the actual euro, which is in an even worse position. So in these sort of, let's say, it's about 8 weeks or so, we've gone from a real risk-off environment to now what is deemed to be, a risk-on environment. That's, we've seen that people are thinking that actually the sort of China-Trump trade talks are going better than expected. He made a comment last night, Mr. Trump, that he's going to effectively sort of delay the tariffs as based on the fact that the talks have been going so well. So that gives us an impact, as I said, that now people are having a bit of a risk-on mentality, and that has a knock-on impact. And we can actually see that at the moment, the Kiwi dollar and the Canadian dollar are sort of top of the pile, so to speak. So just bear that in mind, because we're going to come back to that. We're going to look at that in terms of in terms of themes of that overall within the bigger sort of global markets. What we'll also have, of course, it's another week, it's another Brexit shenanigan of one sort or another, ladies and gentlemen. So, with Mrs. May, she has spent some time with the EU leaders over the last few days, and well, yes, it depends on who you listen to. It depends on how well she thinks those talks went. She says they went very, very well. Everybody else says nothing happened, so there's nothing new there. But anyway, she has a government meeting this morning. There's expected to be some fireworks there, and then apparently she's going to be making a statement to the House later on today. What that statement will be, well, we shall see, because even though this is 10 o'clock UK time, it could change drastically 3 or 4 times between now and, let's say, 2 o'clock this afternoon. We also have Mr. Carney speaking. Okay, today he's got a speaking. I think he's just beginning now, and so invariably people that will be sort of questioned about his particular views and thoughts and about what's going on as we get towards a point where we actually have about sort of 20 odd working days before Brexit is due to happen. Later on today, we've got Mr. Powell speaking, sort of head of the Federal Reserve. He's going to be speaking to the Senate, and then we have sort of at 3 p.m. also we've got US consumer confidence. Okay, so there's high-level news there, so be sure to keep aware of it. What then starts tomorrow, which is of interest to me on a bigger picture, is that we've actually got the start of the President Trump and Kim summit in Hanoi, the meeting there to sort of make conversation or further the negotiations that they began at the start of last year with the denuclearization of the sort of Korean Peninsula, the end of the Korean War. So they're meeting together sort of tomorrow and Thursday, and undoubtedly the world will be sort of taking a keen interest in that to see what comes out of that, because invariably if there's real solid progress there made, well then that's just one element of a step down, okay, in terms of the risk escalation that we've seen over the last couple of years in the Pacific. So with that and the US China Trump sort of trade talks, well there's a theme there of we are sort of emerging from let's say a risk off towards becoming people being more accepting of risk, and then that has a knock-on effect to the equity markets, which we're going to take a look at now. So if I switch across to the Admiral Markets MetaTrade 4 here platform, what I wanted to have a quick look at here was, excuse me, was based on the conversation we just talked about in terms of where's risk on, where's risk off, what are people feeling at. Well, this is a weekly chart of the Australian dollar versus the Canadian dollar. Okay, it's a weekly chart. Those of you who are new to trading, because basically joining us for the first time, the charts are quite simple: a red bearish candle, green bullish candle, a 20 simple moving average, a red 50 simple moving average, a green 200 moving average, fractals, and then drawing levels of support resistance and particular patterns. So why does the Aussie dollar, Canadian dollar have any particular interest to me? Well, this is more about their sort of nature within the, let's call it the framework of global markets. Australia's biggest export customer is China. Canada's biggest export partner is the US. So invariably, what we saw at the end of last year was, last year what we see in the weekly part is invariably when sort of talk about the Chinese economy starting to sort of struggle or struggle with with slowing down, with sort of perhaps the impact of sort of a US-China trade war. Well, invariably what we see is the Australian dollar getting weaker because of that. On the flip side, as the American economy has strengthened, well then invariably that has a knock-on impact to the Canadian dollar. So when we see that there's good news coming out of the US and sort of poor news coming out of China, or worries about China, well then it's not been a surprise to see the sort of the Aussie CAD dip, the Aussie CAD move down. And that's actually what we've seen for for the last sort of, let's say, the last couple of months, since pretty much sort of kind of December time. We've seen a sort of a grinding down. Okay, Aussie's been getting weaker, Canadian dollar has been getting stronger. And that is an impact of the sort of we had worries about China, and invariably the US economy was seen to be stronger. So what we've seen now, we get an actual sort of a trade deal, we start a conversation about the sort of the way forward for China and China and America, and for Mr. Trump and President Xi. Well, then we might actually start to see how that plays out in this particular pair. So this is a pair to keep an eye on, to watch, because I think it's very sensitive to the impact of those US-China trade talks. So one to add to your watch list. There's not really a trade there at the moment, but it's one to give you a sort of a proxy for how well we think those trade talks are going. And as we start to see a little bit of news, I expect we might start to see this sort of drift up a little while as we start to get a sort of, a better feeling about what might be a possible positive outcome from that. So, as I said, that's you can have a little bit of a look at that. Add that to your particular watch list to keep an eye on. But as always, that has an impact, knock-on impact, as we said, in terms of strength, weakness, what sort of the trade talks, to what we see on the other currencies, the other charts. So as always, I want to start with the sort of US dollar index, and that's what we're seeing here. This is the weekly chart. Okay, we started talking about from the start of the year. I talked about how I was interested to see where we're getting that right shoulder building. Well, I wanted to see this particular area where price was move up towards. Okay, and then I'd be interested to see whether taking a short. And what we saw, you can see yourself, price sort of traded up to that area. And if I go down to the daily chart, well, actually I established a sort of a short position here. Okay, a sort of last week or so. Excuse me. We're actually, we moved up into this area that I wanted to see, and then actually what we had here was, this is, it's a key day reversal. Now, if you want to learn more about key day reversals, we've been covering that in the Mastering the 4 M's of Trading webinars, which is run every Monday afternoon at 4 o'clock London time. But this is it's a reversal pattern. Price pushed to a new high, but then actually rolled over and closed beneath the low of the previous day's candle. That's a very bearish candle. It's a very, it's a great indication that the sort of psychology of the market is changing. The bulls have been sort of driven out and the bears are now in control. So, we had a trade here, okay? So, we had a short there about 96.90 with my stop loss just above 97.25. So that gave me about 35 pips of trade risk. And then my target was back down towards 95. Okay, this 95 level for the last 6-9 months has been pretty strong level. So it gave me a trade of around about possible about 180 pips of profit. That's about a 5R trade, okay? Asymmetric reward to risk ratio trades. That's what I've been talking about in the Mastering the 4 M's of Trading webinars. Now, not surprisingly, we always have inflection points that it's just taken interest. First one being that daily 50-period moving average. Okay, I want to see price get beneath it and hold beneath it. And of course, also the daily 200, that always has an interest. So I'll be keeping an eye on that, how price, if it moves down to there, how it reacts there. Okay, but ideally, sort of just running to around about my target. It's in there for about 95.10, and that gives me an indication that we might see some dollar weakness. A little bit of dollar weakness. So then if I am expecting a little bit of dollar weakness, well, then I can start to look at, the other major pairs against the dollar and start to build a picture of, how, are the other currency pairs supporting my view, or are they challenging my view? Is it something that, that helps me establish trade ideas? So if I look at, one of the of course, the sort of the biggest traded, most liquid market in the world, the euro against the US dollar, one of very, very popular trading instrument here at Admiral Markets. But once again, if I look at the weekly chart, we've talked about this, for weeks now. You can see that 113 period has just acted as significant support, whereas also being the sort of, the weekly 200 was down in that region. What kind of I'm drawing my eyes to here is that, I see that prices now, we're getting a little bit squeezed here. We've got the weekly 20-period moving average above us. We've got that, we're around about the weekly 200, and we have that 113 level there supporting us. What kind of interests me is that, if we look over the last, we're looking at over about, the last sort of 10 months or so, the sort of last year was back up in April of 2018, the price was above that weekly 20-period moving average. But since then, every time it's got hit up, every time it's got up above, okay, it's closed above that 20-period moving average. The next week it's been knocked back, okay, that was there back in September, the end of September. Then, we just briefly closed just above it there, okay, at the start of the year. What happens next week? We're breaking down. Then sort of towards the end of January, once again, we tried to sort of break up, okay, and close above it. And next week we got sold down again. And I'm looking to see how price is going to react to that 20-period moving average. Is it a case of that, is it a case that, because we're seeing some dollar weakness, price could actually get above and run back up to 115? Or is this just an indication that the euro is now just so weak? Remember, it's bottom of the pile at the moment, okay? It's 8 out of 8. Is it a case that, we could see it and see it getting pushed down again? So either way, I'm just watching to see how that is actually all coiling up at the moment. It's all getting ready to go, all getting ready to blow, and that's what we're keeping our eye on for the moment. Excuse me. So with that sort of picture, then I'm next interested in the sort of the dollar CAD. Canadian dollar's been very strong, and US dollar's been sort of kind of, it's been weakening. It was top dog all of last year pretty much. Now it's sliding away down, whereas, as we saw, Kiwi dollar and Canadian dollar are top of the pile at the moment. Well, we see that since this year, okay, we've had a bit of a sell-off in the US dollar, a little bit of strengthening in the Canadian dollar. When I go down to the daily chart, this is what I personally see, is that I personally see that, the sort of on the daily chart, the price is in a bit of a squeeze at the moment, okay? Price is getting squeezed. Why do I think that? Well, if we look to the top, okay, we've got the 50-day period moving average here, okay, which has acted as dynamic resistance. That's what we've talked about in that Mastering the 4Ms webinar. It's acting as dynamic resistance. But also what we've had is the 200 period moving average, the daily 200 period moving average acting as support. So price at the moment is getting squeezed between those two moving averages, okay? It's coiling up, it's getting ready to sort of make its next move. If I just sort of look in and draw a couple of, sort of trend lines there, very simple, what we want to see more, that just maybe gives you a bit more of an indication that, in fact, we're starting to see that little bit of a squeeze go on. I'm kind of curious to see, whether we squeeze and then drop to the south, which would give us a further indication of dollar weakening, okay, Canadian dollar strengthening. So once again, this is on my watch list. I'm keeping an eye on this, there's to see how this trade reacts, how it's going, and what that's telling me about the bigger picture about dollar weakness. Is that something that's going to be a continuing theme that we can talk and look upon for the next couple of weeks? So let's have a look at one of the other, popular trading instruments here. We've got DAX30, very popular trading instrument, Admiral Markets. What we talked about here was, on a bigger picture, if I just zoom out a little bit, having had a, pretty torrid time there, okay, in 2018. Torrid if you're a long-term holder, a great time if you're a short-term swing trader like myself. But actually what we saw was, a sort of an inverse head and shoulders, the possibility of a building. And I said, I think a week or two ago that, we were getting sort of mixed messages here. We were getting, real bearish strong candles followed by really strong bullish candles. But what we saw was this drift, and here we are up around about this 11,440, 11,450 area, which has been, significant in the past. It's where the weekly 200 is, and as I sort of dig down to it, okay, I go down to the daily chart, we can see that price is drifting northways, and we're interested to see, is that sort of 11,440, 11,450 area now going to act as sort of support? We've struggled to get through it, and now we're going back and we're bouncing off it, and we're looking to see, can that actually act as support? And what I'm interested in here to see is that, price having been up there, it's drifted back into that area. It's acted as really very, very nice kind of support there. Furthermore, we've kind of broken back up on just this morning, closed back up above that 20 period moving average. We've given, it's a bit of a, what we'd call a scruffy morning star, but it's a morning star nonetheless. And so what I'd be looking at here as a trade is I'd want price to just drift down a little bit, okay? I'd have an order in here to buy at around about 11,464 with my stop just underneath those lows at around about 11,422. My targets would, be back up towards the kind of those kind of recent highs. All right, my target would be around about 11,540, 11,539. So I'd be sort of risking around about 40 ticks for around about sort of 60 odd ticks. Okay, so it's giving me around about just about 1.4, 1.6 R rewards risk for a sort of a short intraday sort of swing trade that might sort of run out for the rest of the day. So keep an eye on that. Let's see, as I said, that level of acting as support. We've had a morning star formation. We're back up above that 20 period moving average. Okay, so if we drift down just a little bit, that'll give us an opportunity to get a little bit of a tighter entry to run up and see if we can attack those highs again. And I'll just finish off by having a quick look at gold. So, we've had an indication of, people are getting an idea that maybe, some the risk off mentality is sort of disappearing at the moment. Maybe a little bit of people are taking a bit more appreciative of risk. And so we've seen over the last few weeks, okay, we saw, just a great bull run there in gold, didn't we? But, what we saw at the end of last week was, this real shooting star formation on the weekly chart. We go down to the daily, as I said, we're in a really nice uptrend, but now that's printing almost like an evening star formation, which is the opposite of the morning star that we've just seen on the DAX. We go down to the 4-hour chart, okay, just to finish up. Remember, this was a trade from a couple of weeks ago in a really nice long run up there, okay, to 1330, but actually went higher. We then double topped and fallen down. And here's what I'm interested in again, okay. Prices, getting squeezed between that 20-period moving average and the 50-period moving average on the 4-hour. I'm intrigued that, the 20-period moving average, you can see there, okay, every time it gets up to it, it's been pushing it down. The 20-period moving average is slanting down, okay, the 50-period moving average is slanting up, we're getting squeezed. We've just had a little bit of a close beneath that 50, okay, and then if I go down to the 1-hour chart, okay, what I'm intrigued to see is that, we had a little bit of a close up above, okay, beneath that 200-period moving average on the 1-hour. Price is coming down here. I want to just see if, can we actually push back down? Will that 20-period now act as dynamic resistance and push us back down beneath those recent lows, in which case I'll be looking to be short around about 1324. My stop loss will be back up around about the 200, around 1326.50, and I'd actually be looking to target down towards around about the sort of 1319.50 level, okay, so that would be risking around about $2.50 for about $4.50 of profit, which is about 1.8 reward to risk, and that gives me, sort of a little bit of an intraday trade. So keep an eye on that. Is that risk on mentality coming, and is that going to continue with the sell through of gold as we see people taking profit after the nice run of the last few weeks? So there you go, Alex. A quick flick through there with a few ideas for you to look at. I hope that. Hope you found that useful. Hope you found that interesting. I wish you all the best of success in your own trading this week, ladies and gentlemen.
Thank you very much for your comprehensive analysis, Paul. Thanks to the audience for listening. I hope you enjoyed today's webinar. If you did enjoy it and would like to review it, you can do so anytime. Just give us an hour or so to upload it onto YouTube. I wish everyone a good day ahead. Goodbye, guys.